Hey, it's Edna Keep here. Welcome to the Seven Figure Real Estate Podcast. I'm your host. I hope you enjoy this episode. Hello, everyone. This is Edna Keep with Seven Figure Real Estate. And today I have with me a really interesting guest. His name is Mike Morowski. And I heard his story. And actually, I was on his podcast not just recently. And we had a really nice chat, got to know him. And I thought, wow, this story has got to be heard. So welcome, Mike. Thanks for being on the show.
Hey, Edna, thanks for having me on. I really appreciate it.
My pleasure. Exactly. So, Mike, tell us a little bit about your background. First of all, how did you get involved in real estate? And then a little bit more about your story.
Yeah, I don't have too crazy of a story about how I got involved in real estate. I've been in the space for about 30 years. I started out as a sales agent. And Edna, I've always believed that success leaves clues. So I know that if you follow successful people, that you're ultimately going to be successful yourself. So I was in the general contracting business and had woke up one morning and I was burnt out. I couldn't do it anymore. Looked at my wife at the time and said, I'm done, and wound up selling the company. Took a year off. And during that year, I decided to house hack a couple of houses. And this is long before it was sexy, right?
So well before there was even that term, right?
Right. Now everybody's doing it and it's the thing to do.
Yeah.
And so we house hacked these two flats, and over the time met a real estate agent who was really successful. And I said, boy, I really think I'd like to go into real estate. And Todd, the real estate agent, said, I think you'd be great at it. You think you got a great personality, you can develop some skills. All you have to do is be very tenacious. I said, okay, great. So I sought him out. I went and asked him if I could shadow him. And he said no. And now, Edna, I'm going to date myself a little bit because he said, I'm going to make you a cassette tape. It'll be even better.
Yeah.
So I equate this to being able to listen to these podcasts over and over again, right? But yeah. I listened to that cassette tape over and over and over again. And I took those basic fundamentals that he taught me that made him and his team successful, implemented them in my business. My first 9 months in the real estate business, I sold 78 houses. Wow. I went on to build a team. We were selling 125 a year, all listings sold, and did that for about 8 years consecutively. 2005, I saw the market starting to shift. And I knew that I would have to go do something else. Otherwise, I was going to have to lay off some people and wasn't going to keep the production up that I had going. So I decided to go in the apartment business. Now, I say that kind of loosely because I didn't just wake up and say, I'm going to go in the apartment business. When I was in the construction business, I did a lot of work for a couple of large syndicators here in Chicago. And I understood the private equity model. So I understood that you took private equity from individuals, married it with a great real estate deal, stayed in the middle, and as long as everything went well, everybody made money.
Yeah.
Well, yeah, I did my first syndication in 2005, small 11-unit apartment building. I said, this is going to be great. I raised a bunch of money from a little ad I put in the newspaper. I ran a little classified ad that said real estate investors wanted. And this is back when you could run a classified ad in a newspaper somewhere, right? And my phone rang off the hook. So I was able to syndicate this deal very quickly. And I thought, this is going to be great. Over the next 30 months, which is a very short period of time, I raised $18 million. I bought $60 million worth of real estate. It was 4,000 apartments in 5 different markets. I built a property management company during that time, managing 7,500 doors. And today I'm in the coaching and training space as a result of that. However, along the way, there were a couple of stumbles.
Yeah, that was one of the things that made our call so interesting, as you were telling me about some of those. So first of all, how does going through a stumble bring you to coaching?
I don't know that it was just the stumble, Edna, as much as it was just my years of experience, the ups and the downs. Here's what happened along the way, right? Is I grew way too fast. I grew a company that was very unstable. So I always equate it to this. It's like sitting on a stool at the kitchen counter on two legs, lifting your feet off the ground, trying to balance, right?
Yeah.
So um, I was very unstable. In 2007, I closed 17 deals for 2,700 units in three different markets. We didn't have time to breathe. So how do you do that and sustain a good, solid business? Well,
Yeah.
we didn't. I was overcapitalized. Over leveraged. I was 85% loan to value on my deals versus being 65 or 70%. And I don't know who was worse, was me for doing it or the banks for giving me the money to be able to do it. I was undercapitalized. I didn't raise enough money. And I didn't pay attention to the details or listen to people around me that were seeing things that I was missing. So
Okay.
as a result of all that, the instability, 2008 rolled around, and it was like hitting a brick wall in a freight train at 200 miles an hour. We started to implode and come off of the rails, and occupancies in our apartments dropped. And I just thought it was an effect of the recession that was going on at the time. And it was, but most recessions, Edna, I had seen that they lasted 17 or 18 months.
Mhm.
This lasted 7 or 8 years. There was a correction of 40% in the marketplace. It was an uneasy space to mitigate. So as a result of that, occupancies dropped. I couldn't pay my bills. I couldn't pay my investors. I had companies that were operating very poorly, and the cash flow was really bad. And so what I tried to do was tried to save all of my companies. So I started to move money between profitable companies and the non-profitable companies, thinking I can shore this thing up. When the market bounces back, I can put all the money back. My
Mhm.
accountant, my attorney both said, hey, you can do it, just leave a paper trail, which was fine. That wasn't illegal. But what was the fact that I didn't disclose to my investors. So I didn't tell my investors what I was doing. And as a result of that, for non disclosure, I wound up being sentenced to wire fraud and mail fraud charges and sentenced to 10 years in federal prison as a result of it.
Mm. That's got to be a challenging time. So when you went to jail, is there like a white collar jail, or how does that work? I don't know.
Yeah, there's what they call federal prison camp, and they say it's easier, but I wonder if it really is. Prison. I don't care where you go or how long you go for. It's a dark place, and
Mm,
it's not a place I would wish one day on anybody.
yes.
I went from this space, Edna, of living a middle class lifestyle, average. I never flew private. I didn't buy a big boat. I didn't have big fancy houses or cars. I tried to build a business, and I went from being the neighborhood baseball coach, soccer coach, being home most nights for dinner, having a great marriage, to being ripped from that. And all of a sudden, I'm living in a 12 by 12 room with three men I don't know, out of a 3 by 5 locker with three green outfits and 5 pairs of underpants, wondering what the hell happened to my life.
But from the first time we talked, you really made some lemonade out of those lemons. Tell us how that went down.
Yeah, so I was in prison, wondering, like I said, what the heck happened. Walking around for the first couple of weeks I was there, wondering how I was going to get through each day. Well, I was in prison about 17 days, and then my wife decided she was going to divorce me.
Mm.
So when that happened, I really felt like my life was over at that point. Totally defeated, took all the wind out of my sails. Didn't feel like I had the ability to progress. Um, and so I was probably in prison about 6 weeks. And, it's a funny place because as bad as it is, there's a bunch of good guys and they circle around you, kind of lift you up and try and help you. And I walk into the gym one day, and now you have to remember, I walked into window shop. I wasn't really interested in much. I'd come from being a marathon runner, working out a lot, to now I'm 35 pounds overweight, wondering, how I'm going to exist each day. This guy walks over to me and he says, hey, Don't let these people beat you. All they want to do is take everything from you that you've ever known. They can take your real estate, they can take your business, they can take your cars, they can destroy your family, but what they can't take is who you are and what you're made of. He goes, you're tougher than that. He goes, get that all back. Get your 10 years back. He goes, come in this gym, come to my class every day, start working out, start losing weight. You'll start to feel better. And he was right. I did. I started going to the gym. I started working out. I started feeling better. I wound up going to college. I got a bachelor's degree in theology. I wrote 2 books while I was gone. One's called Exit Plan, Your Complete Guide to Multifamily Investing and Why You Need an Exit Plan Before You Buy.
Mm-hmm.
I wrote 2 home study courses. I wrote an ethics course. I taught real estate investing, property management, and ethics in prison. How ironic, a federal inmate teaching ethics, right? I was on an outreach program. I went into the community. I told my story 40 times the last couple of years I was there because I was a model prisoner, right?
Yeah.
And I spoke to small business owners and to college students. I befriended a professor at the University of Minnesota, and we wrote a paper together. It was an ethics case study that we had published this year in the Business Journal of Ethics. And it gets taught today at the collegiate level for forensic accounting classes and sales and marketing classes. So, I took this tough spot and I really made it good. Now, not everything has come back. I still have family that doesn't talk to me and that are upset with me. And I can't even imagine what it was like for them when I went away and, what life was like for them. But, I'm back today and just really trying to rebuild, right? And so my goal, my focus is to give back to others, to help business owners who are scaling their business to watch what they're doing, to pay attention to the details around them. That's the big thing that I didn't do was I didn't pay attention to detail.
Mm-hmm.
If I think back in 2008, I was trying to close a deal and my office wasn't funding the money that I needed for our portion of the purchase. And I finally get my partner on the phone late that afternoon. It's a Wednesday. And he says, I don't know how to tell you this. Now, I don't know if you've ever been in a situation where your partner tells you, I don't know how to tell you this, but you're in trouble.
Yeah, something's wrong.
Yeah, he proceeds to tell me that he took the $500,000 from the escrow account, used it for something else, thought he could have the money back in time and didn't. So I had to go home, raise some more money, give some equity away on the deal. I got the deal closed. But here's the point to this is I never told my wife about my business. I never told her about what I did. And on Friday that week, we went to dinner with his wife, with my partner and his wife. And on the way home, she knew nothing about what happened earlier that week. On the way home, she said to me, I don't trust him. And I was like, don't worry, honey, I got this. And, trying to be a good husband and kind of calm her nerves when really I didn't have it. And what would have been good was if I would have said, hey, tell me why you don't trust him. Tell me what you see that I'm missing.
Yeah.
Well, then the funny thing was a week later, I was at lunch with my attorney and my attorney told me the same thing. So, we don't pay attention, right? We don't pay attention to the details, the things around us, the people around us, because we get going so fast. We put blinders on and your blinders need to have peripheral vision. You have to see what's happening around you in order to be successful and stay successful.
Mm-hmm. So. Absolutely. Yeah, it's interesting because, it was probably like an intuition that they had that you weren't seeing because you're almost probably too close, right?
Exactly.
Yeah,
absolutely.
Mm-hmm. Interesting. So how did you bounce back from that one? Or is that kind of when the shit all hit the fan?
Well, that was the first piece. It was about a year and a half later before everything kind of really blew up. Mm-hmm. We went a long time and closed a lot of deals and did a lot of good along the way. Had a foundation. We served the homeless, raised a couple $1 million, gave that away. I mean, we did a lot in the communities. where we had apartments, enhance the surroundings, the curb appeal, the stakeholders in the area. So we really, we were on a mission, but when 2008 came around and the world just kind of crashed down, I thought we'd weather the storm as a commercial vendor, but it ultimately caught up with the commercial market too, and that's where we got hurt the worst.
How do you think some of the stuff that's happening in the market today, like with COVID and all this printing of money and everything like that, how do you think that's going to play out, Mike?
Well, I was just looking and doing a little bit of a study on some market conditions and things like that, and I think that when you see how supply chains are so jammed up today, we can't get housing goods, we can't get products.
Mm-hmm.
You order a t-shirt online, it's a 4-week delivery for a t-shirt. It's nuts. But everything across the board's like that. It's caused prices to skyrocket. It's caused interest rates to come down and for cap rates to compress, which has caused pricing to be kind of unrealistic today. Mm-hmm. I see shades of 2007. I see situations where people really need to be careful. Your behavior in your underwriting is really important today. You need to be conservative. Mm-hmm. I come from an old carpenter's background, right? So my methods, my thought process has always been measure twice, cut once. Mm-hmm. And you better check and double check and probably even triple check your numbers right now. I'm seeing people putting returns out that I don't know how they're going to produce them. Hey, I've lost, I like to say I've been the bridesmaid on 5 or 6 deals in the last 8 weeks because people have outbid me and overbid on properties, and properties barely penciled at where I was at. If they didn't pencil well for me there, I know they're not penciling for somebody else. Mm-hmm. So how do you in this time be cautious? And let me say this, I'm not telling people don't do real estate, because there's great opportunity out there today, and there's even going to be more in the next few months to come, but just be cautious, that's all.
So, Mike, for people that are new and maybe just buying their first or second or third multifamily, what advice would you give them?
I would say make sure that you are checking and double checking everything, that you are vetting, right? Make sure that the data that you're getting from, whether it be a broker or whether it be from a seller directly, is correct data. Mm-hmm. I'm looking at deals today, Edna, that, they advertise the square footage in the offering memorandum at one number, and you think, oh, I'll be able to get this much rent increase because of the square footage. And then we go and we do the due diligence, and it's 100 square feet off. Mm-hmm. So I can't raise the rent to where I thought I was going to be able to raise it. Yeah. So now I have to shift the whole model, right? Yeah. The other thing is I have underwrote deals where there's a discrepancy in the OM of $10,000, $15,000 because, and I don't know that brokers do it intentionally. I don't know that sellers do it intentionally. I think they're math errors. But I tell people all the time, I say, look, I went to jail for a math error. You got to be careful, and you have to watch that. When I look at the 5 mistakes that I made, I overscaled way too fast. Mm-hmm. Don't go fast, slow down, take your time. It's a marathon, not a sprint. Don't over leverage. Make sure that you're putting enough money down, and make sure that you raise enough money. Make sure that you have enough capital and enough reserves sitting in the bank. I think those 3 things will keep a lot of protection around you and what you're doing. Remember, when we raise other money from other individuals, we're held at a much higher standard. Mm-hmm. We have to really know what we're doing. So, yeah, hope that helps.
Well, you know what, it does, because we are in a strange market in some places. I met actually a lot of real estate investors in 2007, 2008 that lost everything, like lots and lots. and people who were playing really big, doing really well. And a lot of them didn't see that coming. And so I can definitely see where that kind of stuff can happen. But yeah, mitigating that makes all the difference in the world, doesn't it? Growing. And you know what? We do have the ability to grow really fast. So sometimes we just have to slow down and say, yeah, we need to? We don't need to grow that fast. There's lots of money to be made, but being safe is people need to be safer when it comes to it. Like they got to think of the downsides, because it does happen, right?
Yeah, for sure.
Yeah. So when you're coaching and training people, what's your main focus?
You know, it's interesting. And I think you and I kind of had this conversation a little bit the other day, but I always tell people, I say, look, I work in the same box everybody else does. Hey, I teach you, we talk about your goals and we get clarity, and we talk about team building and networking and sourcing deals. And we talk about early evaluation traps and underwriting and due diligence and going to contract. But a couple keys that I focus in on in that box are exit planning. I believe that, I spent hundreds of thousands of dollars over the years coaching and training on books and tapes for myself. And some great trainers, some excellent real estate trainers. Everybody teaches you how to get in a deal. Nobody teaches you how to get out. And that doesn't always necessarily mean how to sell, but it just means, what do I do differently? How do I capitalize on my profit, right? And that's what I like to teach about is in that exit planning. Hey, we teach about how to raise private capital and all those things. But Edna, more important, what I like to tell people is, look, this is about you. And we work outside the box, because if you don't grow personally, you won't grow professionally. So I want to help you grow personally, whether it's mindset, whether it's best example I can give is I'm coaching a guy. We're probably 4 or 5 months into a coaching program, and he's stuck. He's stuck for a few weeks, and finally I said, let me ask you, what's going on in your marriage? And he stopped dead in his tracks and looked at me like, where'd that come from? I said, well, you're stuck. I said, something else is going on in your life. Well, he comes back a couple of weeks later for our next call, and he goes, that's the best question anybody could have ever asked me. He said, I finally realized something needed to change and something needed to be different. So he fixed that problem, but the problem wasn't in his business. It was in his life personally. So as a result of that, we were able to make some differences. So that's what I always tell people is, look, you can have that goal to buy 1,000 doors or make $1 million, but who do you have to become along the way to get there? And then when you get there, then what? So how do we formulate you to get you there to do it?
That's so powerful. Yeah, I agree too. Because you know what? Many times we've even heard of people win the lottery, but then they lose it all, right? We actually had that conversation last night with friends of ours, because my husband washed a lottery ticket in his pants pocket of all things. So I was telling him that I had just read an article that said, even people who have a chance to win sometimes screw it up by, he said, I think I read it was $800 million in lottery monies that haven't been distributed. And I said, this is what happens. People wash them in their pants pockets. So, there's so much of that thought process that needs to happen. So it does. The mindset has to grow to be a multi-million-dollar real estate investor from the person that you started to be today. Your self-image has to change and think you need to grow. Otherwise, it's not going to last either. Right, Mike?
Right. Absolutely. Yeah. 100%.
So tell me the name of your book again. I want to, it's Exit Plan.
Right. And, Edna, I'd love to give all your listeners a copy. They can go download a copy free from my website.
Oh, beautiful.
They can go to mycoreintentions.com.
Okay.
/exit plan and download an ebook. And let me just warn you, I had somebody tell me one day, she's just getting on my podcast on Saturday morning, and she gets on and goes, man, my husband was just yelling at me because I printed your book off. She goes, this 264 pages. I said, yeah, it's a book. I said, what'd you think? She goes, well, most ebooks are. I said, no, it's not an ebook. It's a book. So
It's a book.
yeah,
So,
it's a lot of information. So
all that. So it's mycoreintentions.com exit plan.
yeah, /exit plan. Right.
Okay, perfect. Oh, well, I was just going to go buy it. So that's awesome. And I'll put that in the show notes. And then, Mike, if people want to connect with you, what's the best way?
Sure. Thanks for asking. I am all over social media. So Instagram, LinkedIn, and you can direct message me at mike@mycoreintentions.com.
Okay.
And I am open to networking and talking to people, answering questions and helping any way I can. So,
yeah, well, that's wonderful. I absolutely love what you're doing. I love how you've taken, what you've learned and using it to help people, because I do believe we do need an exit plan. And you're right. Very few people teach that. It's all about, myself included, get in. But yeah. And at some point in your life, most people do want to get out at some point, unless they're going to transfer it over to their kids. But even then they have to understand how to do that. Right.
Right. Absolutely. Absolutely. So,
oh, this is awesome. Well, thank you so much, Mike. It's been a real pleasure having you on my show, and I'll make sure and let you know when it goes live, and we'll definitely stay in touch. You've added huge value.
Yeah, thank you, Edna. I appreciate it. It's been a pleasure to meet you and spend some time with you. So I've enjoyed that.
Thanks so much, Mike.
Bye.
Thank you so much for listening. It's my sincere intention that you got value from this episode. If you're interested in learning more about building your passive income through real estate, either by investing with us as a joint venture partner or as a student discovering how you can attract investors to your deals and build your own 7-figure real estate portfolio by helping others build their passive income, check out my website, ednakeep.com, or watch my free masterclass at ednakeep.com/90days to 5K.